we've got a myriad of subjects that we could cover today with everything else that's going on. We're filming this 8 days into Russia's war in Ukraine.
It seems like a month.
It does, doesn't it?
God.
And doesn't it also feel like everything that we've come through since is just a distant memory? I mean, had this not been around, we'd have been 2 weeks into, post-COVID full freedoms, and that just feels like it's months ago now.
Yeah.
What are we seeing in the markets as we stand at the moment?
Well, European equities are absolutely battered. It's something that I note quite a lot recently. A lot of people tend to be looking at the US equities, which is fine. Largest equities in the world in terms of the indexes. But there seems to be less of a focus on things like the DAX, the CAC, the FTSE even. And I think it is kind of a bias over the last kind of, 2 years of pure bull market stuff related to US equities. But now we're really, really seeing the DAX, for example, come off heavily. And I think it's got a lot to do with obviously the proximity to the geopolitical conflict. Whereas the US is much more insulated to it, it's less involved. There's less connection between the US and Russian natural gas, maybe even, Russian wheat, grains, Ukrainian grains or wheat, for example. And people tend to be ignoring that. But the DAX is trading now currently, I think, about 13,300.
And where was it prior to this or at the start of the year?
15.6K.
Wow, okay.
Yeah, and the ES is down at, I think, 4,350, say, maybe just between 4,350, 43.25. So there's a big disparity there, especially in the way that it's traded. The ES is kind of going a little bit rangy almost. And all the focus tends to still be on the US equities, but all of the opportunity so far has been in Europe. And I think it's shown a really, really kind of big thing there in that, Europe really, really is being heavily affected by this, and the market is showing it. I'm saying that the DAX is in crash mode. We saw a 5 sigma move in rates. We saw a 4 sigma move in rates last week in Bund. Yeah. I think it was a bit of a squeeze, but it's kind of beyond the point. There was a long duration, high quality liquid asset kind of search there at a time of stress. And we're also seeing large moves in the general rates environment as well. The MOVE index moved 5 sigma just yesterday or the day before. Wow. So, we're seeing really, really big moves that are indicating, underlying signs of stress. FRA OIS spread was up 4 bips just yesterday, which is showing some interbank stresses as well. And, if we continue that same pace up until the hike, it should be at something like, 45 basis points, which is really, really showing interbank stress as well.